It looks like the stock market's continuing its momentum, and Santa Claus rallied today as all major indexes are up slightly. The S&P 500 is now up 23.8% for the year and only 0.9% before its all-time closing high. And the NASDAQ has been up for 11 of the past 12 trading sessions and is now up 43.3% for the year. This strength in the stock market should increase the odds that the rest of this week should be pretty strong too. This brings 2024, the first quarter of 2024, I think should do pretty well as well. By the end of the first quarter of next year, I think we might see a little bit of a consolidation or maybe a 5% pullback, because I think the market will eventually overextend itself and be a little bit too much overbought in the short term. So I think by March of next year, the market might stall out a little bit, and that might last for about a quarter or two, maybe be flat or down 5%. Then we have the elections. Right before that, maybe from like July through September, the market should gain some traction and go up again, because of all the promises that are being said on the campaign trail. But in reality, I think in October, as the election goes closer, there'll be a lot of investor anxiety about the outcome, and I think the market might go down maybe 5, maybe max 10% right before the election. However, once the outcome of the election is known, then I think the market after November, once the outcome is known, the market should do well at the end of next year after that. Obviously, we'll have to see. And then there's another important news story I wanted to touch on. As of last year, 2022, 58% of Americans own stocks, and that was a record. And that number really accelerated after COVID, as more Americans obviously have the internet at their fingertips to learn and research the markets, business, and companies, the economy. And then the other part of that also is because Americans are realizing from the internet is, the money they have in cash doesn't really keep up with inflation. And in fact, the amount of money they have in cash gets devalued over time in order to pay our debt. And the best way to keep up with inflation over the long run, at least, is by owning assets such as stocks. And more Americans were realizing that, especially after the pandemic, when obviously to fight the pandemic and the supply chain issues, the government and the Federal Reserve pumped a lot of money into the economy in order to keep the economy afloat, and rightfully so at the time, but that caused inflation. And for the long run, the best way to keep competitive with inflation, and so that your dollar doesn't get devalued, is owning assets like equities, and more Americans realize that. And honestly, I expect that number to go from 58% from last year. I expect that to continue to increase over time as more and more Americans realize that, because devaluing the currency in order to pay down our debt is pretty much an indirect tax on everyone. And as more and more Americans realize it, they'll continue to get more into assets like stocks, maybe even bonds, real estate, and crypto. As you can see, there's a lot of optimism in the market now, and possibly rightfully so. However, the biggest risk right now in the market is that they're starting to be, at least in investors' opinion, little to no risks. And that could potentially be an issue at some point next year. Right now, we're seeing that the S&P 500 index, the SPY short interest, is at the lowest since 2018. So that means that there's the fewest amount of bears since 2018. A lot of bears were capitulating and giving up and going to the bullish side. We saw that with Wall Street's biggest bear, Mike Wilson, just the other week, last week. He was Wall Street's biggest bear from 2022 and throughout 2023, and he pivoted and turned bullish. So honestly, that could be the biggest risk in the economy, is that there might eventually be too much optimism and euphoria. But I think that'll happen perhaps sometime in 2024 in a little consolidation or pullback.